Closing costs versus cash to close. There's a difference. Let's break it down right here on Devin Group Now. Devin Group Now, episode 2. We made it to our second week here, and
are you not entertained?
Just trying to help our home buyers, clients, referral partners navigate some of the topics of purchasing real estate that aren't that easy. Today we're going to talk about closing costs and the difference between closing costs and cash to close. Two different things, and we're going to break it down in a simple format here. And the closing cost side of it, I think, is where people get confused. It's not everything that's needed to bring to the closing table, okay? Closing costs are the fees associated with the loan. It might be appraisal, your lender fee that covers, processing, underwriting, closing the file. And on the attorney side, you have recording fees and the attorney's fee to close the loan, title insurance, municipal lien cert, plot plan.
Could you start over again?
Typical costs that usually add up to about 1% of the purchase price.
What the heck was I talking about?
What the heck was he talking about?
Not exact in all cases, but a general rule of thumb that I like to use with our clients to give them an idea of cash that will be needed at the end of the transaction. Now, like I said, closing costs typically add up to about 1%. What goes on top of that? Well, you have what's called your prepaids and escrows, okay? Your escrows are your taxes and your insurance if you're buying a single family or multifamily home. Typically, you're going to have to insure the property, and you're going to have to pay 1 year's insurance premium up front. If you're buying a condo, it's a little different. Contact me and I can walk through that with you. It's going to be a little bit less of a cost, but with a property, a single family or multi-unit, you're going to have to pay for your insurance up front. You're also going to have your taxes, no matter what type of property that you're buying, where typically a tax bill might be due and you're going to need 2 or 3 months tax or insurance escrow.
If you don't write checks, how do you pay these guys?
Straight cash, homie.
On top of that, and the last item is really prepaids, okay, which is daily interest. You might be closing in the middle of the month and you need to make the rest of that month's mortgage payment. So if you're closing on the 15th of the month, you're going to have to pay through the end of the month. Your first mortgage payment won't be till the following month. You won't pay on that first of that next month. It won't be to the following, but that immediate interest is due. Month. So when you take closing costs plus tax and insurance escrows plus your daily interest, that number is typically higher than what most people are thinking. So if you want to walk through your own personal scenario, feel free to contact myself or our team if your loan is in process. More than happy to break these numbers down for you. Remember, any questions regarding mortgage financing, you can reach out to myself. Check us out at cdevin.com. Next week, we'll be back with another tip right here on Devin Group Now. Have a good week, guys.